just start with the data. And there's no judgment, whatever happened in the past happened in the past. Let's just look at the data so that we can use that to inform how we're going to move forward, and whether that's just taking your bank account and organizing the information, look at what's coming in, look at what's going out. Because once you see what the data tells you, then you can decide what to do with it. Are we spending too much money on subscription services that we need to cut back on? Or are we not charging enough for our products?
All right. Hey, everybody. Welcome back to the Workergenix Mastermind podcast. Today, we have a special guest, Cheryl Heller. She's the driving force behind Pillar One Consulting, offering tailored fractional CFO and strategic advisory services to empower small businesses and startups. She's also a partner in a private equity firm and a real estate investor with a focus on short to midterm rentals. Cheryl excels at demystifying the complexities of financial management for business owners and entrepreneurs. She champions a judgment-free approach to finances, breaking down daunting tasks into manageable and comprehensible steps. With her guidance, entrepreneurs transition from uncertainty to confidence, armed with robust financial plans tailored to their unique needs. Cheryl, welcome to the podcast. How are you today?
Thanks so much, Harley. I'm really excited to be here. I am doing great. Been snowing the past couple of days in Washington, D.C., so looking forward to some warmer weather.
Yes, hopefully that comes soon for you. Cheryl, tell us a little bit more about your background. How did you get into this financial advisory and the CFO role?
So I kind of fell into it a little bit. So my background is accounting and finance, and I spent over 20 years at a large financial services company and did everything from finance to operations to large projects. And when I left there about 7 years ago, I knew I needed a little bit of time to sort of clear my head. It had been a pretty stressful environment. And so I knew that I wasn't going to look for anything right away. And then after a couple of months, friends and former colleagues called me and said, "Hey, I'm working on this new thing. Can you come help? Or I'm doing this startup. Can you, help us with the finances?" And I started doing that. And I was like, wow, this is really fun working with small companies that, you can make day-to-day impact as opposed to a really large company where everything has to go through, months of process and socialization and all of those sorts of things. So 7 years later, it's really been, kind of growing my network of people working with small businesses, and it's been a lot of fun.
That's awesome. I imagine you really had powerful impact with these small businesses. Like you said, that you're able to make those changes and see them happen. And I'm sure it's been really rewarding to see those changes and improvements that you've been helping people with. One question I had that I think probably is on the minds of many business owners, especially in professional services, they feel overwhelmed by their finances. And, what's one of the biggest mindset shifts that they need to make?
So I really like to just start with the data. And there's no judgment, whatever happened in the past happened in the past. Let's just look at the data so that we can use that to inform how we're going to move forward. And whether that's just taking your bank account and organizing the information, look at what's coming in, look at what's going out. Because once you see what the data tells you, then you can decide what to do with it. Are we spending too much money on subscription services that we need to cut back on? Or are we not charging enough for our products? Those are all revelations that can come from just understanding the data. And I find that if people are not finance or numbers or math people, there are a lot of great business owners that they are all in their industry, their product, they are the guru of those things. But if they have this sort of thought in their head, oh, I'm not a math person or I'm not a finance person, then they might just ignore all the financial aspect of it. And that is causing their business not to be as successful as it otherwise could be. And so really just taking a step back and saying, it's just another piece of information. There's no judgment around it. There's no emotion around it. Let's use that information for what it is and let it help us inform what we're going to do going forward.
I love that. Taking the emotion out of what could be stressful or fearful topics is often a great way to just get started and, force that initial conversation and looking at the data. Well, thank you for sharing that. What's the most common financial mistakes that you see entrepreneurs making, and how would they correct them?
So I think the most common is not understanding how much you should be charging for your products. And so people might look at, competitors or, other folks doing similar and say, oh, we should charge X for our product. But it's not supported by the data internally. So if you are, say it costs you $100 to produce your widget, and you're only selling it for $100 because that's what the next guy is selling it for, you're not really making any money. And so you have to really understand, what does it cost you to produce your product, whether it's a professional service or an item that you're actually selling. And then from there, figure out how you want to structure your margins, and then decide what your price is. And then you kind of look around and say, okay, what is everybody else charging for similar items? Am I charging too much for what the market can bear? And if I'm charging too much for what the market can bear, then I need to go figure out how I can produce my product for less. Or I need to figure out what my differentiator is so I can convince the market that my product is worth more than my competitor's product.
Love it. Yeah, that's something Alex Hormozi in one of his books talks about, the $1 million offer, right? If you can make your product or service, include all the things that address the problems that your potential clients need so much, then make it a market of one, so you're not having that competition. One kind of leads into another question I had. I see a lot of business owners, they don't ever look at their numbers or the books or where their finances are. And if they do, it's often only like right at tax time. And they're like, okay, well, I got to pull the bank statements and my receipts and all that and send it to the CPA and let them deal with it. For people that are in that position, what kind of advice do you have for them?
Well, I think if you keep up with it every month, you don't have to spend a lot of time on it, but keep up with it every month, then you'll be able to not spend a whole lot of time on it. You won't dread that January, February, March time period where you have to pull all that stuff together for your tax accountant. I think there's two things that strike me with that. Is that the first thing is, if you're not paying attention, you won't know how much you're supposed to be paying in estimated taxes. And that could potentially cost you in penalties and interest if you're not keeping up with your tax payments throughout the year. And the second thing is that when folks are looking at their tax return is going to say one number, but their cash flow might be a very different number, because there are things that you might deduct on your tax return or might not be able to deduct on your tax return that are actually cash costs for you. So for example, if you own a building or any sort of property that is part of your business, right, you have a loan on it, your tax return is not going to count the principal payments on that loan against your net income. So you might have positive net income, but those principal payments come out of your cash. And so you really have to understand the difference between your income statement, whether it's a tax-based income statement or another accounting-based income statement, versus your cash flow. And if you're not looking at your numbers anytime except for tax time, you're not going to have a good handle on your cash flow.
I love it. And if you don't know what your cash flow is, you don't know what you can budget for investing in, like new equipment or new marketing endeavors or new services, whatever that may be, to actually grow the business.
Exactly. If you don't understand your cash flow, you don't know how much you have to reinvest in the business, whether it's, I often work with folks that want to know when they can hire people. And so we have to go back and we have to understand the cash flow first and their revenue projections to align those two.
Do you have any recommended like tech tools or financial tools that people who are getting started in their business and maybe or haven't been established for a while but just haven't been keeping up on their finances should consider or might consider to help them stay on top of things and better manage and track their cash flow?
So I'm an Excel junkie, right? Like I like to do everything in Excel. And I know that there are a lot of, software tools out there that help you manage your business finances. But I find when you're looking at doing this kind of analysis, you're looking at projections, you're trying to figure out your cash flow. Like for me, Excel is just much more flexible and I can get it to do the things that I want, as opposed to some of the other tools where they have their algorithms kind of behind the scenes and you put numbers in the blanks and it spits out another number. And if you can't trace it exactly, I don't like that feeling of not kind of knowing the process for how you got from one to the next. I think for when you're looking in the past, anything like QuickBooks, I primarily use QuickBooks with most of my smaller companies. There are some larger systems, like I use Sage Intacct at one of my larger clients, but QuickBooks is very, user-friendly and very helpful if you're just trying to organize your data in the past. And oftentimes what I'll do is get somebody set up in QuickBooks so that we can organize like the last year or two of data. And then I'll download that into Excel to create the forward-looking projection.
Now, you kind of mentioned KPIs earlier on. If a business owner could only track 2 to 3 financial KPIs, which ones would have the biggest impact and how should they review them?
So I think for me, the couple of the most important ones, one is going to be your gross margin. So that is basically when you take your revenue or sales and you subtract your direct cost to produce your product, whether that's, your raw materials or your professional services, it's the people's time that is spent there. And then you divide that by the revenue. So you want to figure out in your business, in each industry, each business type is very different as to what their gross margin is, but you want to figure out how your company compares to your industry standard for gross margin. And that way you can figure out if you need to be more efficient in your direct manufacturing processes. And the second thing is looking at your receivables. So there's a metric called days sales outstanding, and that's basically how long it takes for your clients to pay you once they get their invoice. And so when that is very long, then you're doing all this work and you're not getting paid for a month to 3 months. And so that really harms your cash flow. And so you want your days sales outstanding to be as short as possible.
What are some things people can do to get that number down for, if they have a long time before they get paid? Are there options or policies or other services they can use to help fix that?
So a couple of things. So first, you can look at your contracts that you're putting together and make sure that you have, either net 15 or net 30 in your contracts. So that way you have something to hold your client to. Then the other thing is that you could potentially, depending on the product or service you're providing, split the amount. So say somebody's going to pay $10,000 for your service, you take $5,000 up front and then $5,000 when the work is complete. So at least you're getting, some of your money up front and not waiting for the whole thing after your work is complete. And then lastly is making sure that you're following up on invoices because everybody gets busy. We still have problems with things going into your junk mail, and so you might not see it. And so you want to make sure that you're looking at your accounts receivable aging schedule. So that's basically all the invoices that are outstanding and how long they've been outstanding for. And if it's past the due date, have a process in place with your team that, on this day, we're going to follow up here. On this day, we're going to follow up here. On this day, we're actually going to escalate, and somebody higher up in the chain is going to follow up with, somebody higher up in the chain at the client to make sure that we're, keeping on track of this and make sure that they know that they have.
Well, I'm really glad you brought that up because a lot of our clients at Workergenix, they use their ultimate executive assistants to do that exact thing. They're going to be in charge of sending out those invoices, monitoring them, and then doing the follow-up, and then letting the principal know if there are issues with payments paying or a client paying those, so that's just one less thing off the owner's plate. They don't have to worry about it. They can just trust, these invoices are going out and we're going to get paid on time. And if not, I'm going to know about it without having to dig into all the details. Do you have any recommendations for a simple kind of no stress approach to budgeting and forecasting that it actually work for a busy business owner that doesn't have this in place already?
Yeah. So I think the first thing is to look at what your P&L, what your income statement looked like last year. And then there are going to be some things that, they're not going to change year over year. Like your rent is probably going to stay the same. You can probably predict your salaries pretty closely unless you're hiring a lot of people, right? And so those things are very easy to carry out on a monthly basis. And then you want to look at what is it that we want to do? What's our strategy this year? What are we going to do differently? And how much is that going to cost us? Whether we have to spend more on marketing or purchase a piece of equipment and factor that in. And then you also want to look at your revenue and make sure that you're doing what you can to increase your sales. Usually sales is done from a budgeting perspective. You have to spend some time and really articulate what are your assumptions there and how are you growing that. But most line items on your budget are just going to be a straight carry forward from the past year. Now, there's not a lot to go into it. So pick those 3 or 4 line items that are really going to have a big impact that you are really sort of tied to your strategy where you're going to want to spend your time.
Every day, your top performers are buried under emails, scheduling, and reporting. Work that doesn't move the needle. The result? Frustration, burnout, and worst of all, lost revenue. That's why we created the Executive's Guide to Scaling High Performers, a simple, battle-tested framework to eliminate busy work and unlock your team's full potential. Inside, you'll get the exact steps top executives use to retain A players, boost productivity, and free up their team for high-impact work. Stop losing revenue. Go to workergenix.com/growth-hub or check the episode notes to download the Executive's Guide to Scaling High Performers now.
Once someone has that kind of budget and forecasting, they've got those KPIs in place, what frequency do you recommend they look at those numbers and update them?
So some of it's going to depend on the type and the size of business, but with most of my clients, we're looking at the financial numbers once a month. And in some cases, depending on the stage of the business, we might look at cash flow more frequently, like every 2 weeks or so. And some of the KPIs, like, maybe days sales outstanding, and some of your sales related KPIs, like, your converted leads and things like that, you might be looking at weekly. But for the most part, you're going to want to look at your financial statements on a monthly basis, and you're going to want to look at your current state of your balance sheet and your income statement. And you're also going to want to do a budget to actual comparison. So that's when you're going to take that budget that we talked about in the previous couple of minutes, and you're going to compare it to, okay, I thought that I was going to bring in $100,000 of revenue this month. I only brought in $80,000. Well, what's that all about? Well, is it a timing? Is it just that, like, hey, we have somebody, they just didn't sign by the end of the month, and so we couldn't bill them, and so we're going to bill them next month, so that's great? Or did we not hit our sales metrics that we were looking for? Like, were our salespeople making enough calls, having enough meetings? And if not, then what do we have to do? Like, what are the steps underneath that we have to do to make sure that next month we're actually going to get there?
Now, I know some, people have not been doing this. They've not been in that monthly routine of looking at the numbers, looking at the KPIs. Are there any recommendations you have for habits that business owners could adopt to stop avoiding their numbers and start using them to help drive their decisions?
Yeah, I like to schedule the regular meetings, right? So put time on the calendar, whether it's weekly, biweekly, or monthly, where you know that you have carved out that time solely for that discussion. So really use that kind of time blocking methodology. And the other piece is making sure that you have certain processes in place. Like you mentioned that some of the Workergenix clients have their assistants do their books. So make sure that you know what the SOPs are. Like on what day of the month are they doing which part of the process? By which day of the month are you going to have the books closed and you're going to have statements to look at? If you have those processes in place, it sort of takes the guesswork out of it, and you just can follow the process and the calendar, and it's all sort of laid out there for you.
I love it. Now, if they do have an assistant helping them with these things, are there any tips or recommendations for how that assistant could help hold them accountable to having those monthly meetings and analyzing the reports?
Yeah, I think just making sure that the meetings are on the calendar. They are a priority, so don't let people schedule over them. I think it is really important. And then, and sometimes things happen, right? We're all busy. We're all trying to grow our businesses. And so sometimes there are legitimate things that come up that you really can't make that meeting. And in that case, I like to do some email conversations, right? So lay out what did we see this month that was different from last month? What are some trends that we're seeing? How are we, analyzing the financial statements in a way that's going to help the business owner make better business decisions? Because that's really what it's all about, right? Like I said, when you know better, you do better, right? Like when you know the data, you can make better decisions about running your company going forward. And so it's really all in support of that.
Yeah. One thing that I've heard with budgeting in general is that, a lot of people put it off because they're afraid that it's going to restrict them. If they see the numbers, they're going to realize, oh, I've been doing it wrong, and I'm not going to be able to keep having this fancy car as a business expense or whatever, that little luxury item that they have as their business expense that they like. But really, most people will find when they do these steps that you're recommending, it's actually empowering them. And they're like, oh, wow, actually, I can make smart, informed decisions. And if I want to have that luxury car as a business expense and legitimately use it, of course, then that's fine, as long as I'm having the cash flow to support that. And I know I do, so I'm good to go on that.
That's a really important point too, because as business owners, the finance team is not here to tell you how you can and can't spend your money, right? If you want to spend money on a luxury car, great. And if that means that the business profitability is a little bit lower, great. I have business owners that I work with that, we look at their net profitability margin and lower than what somebody looking to perhaps acquire a business would want to see. But we know that it's because of some of the expenses that they have or how much they're paying themselves, that you wouldn't necessarily, if you hired a CEO for the business, you wouldn't pay them that much. And so we can kind of rationalize, like, I'm not telling them like, oh, you shouldn't pay yourself that much. But what we're saying is, yes, your profit margin is lower because what you're paying yourself is higher than a market rate. I think it all goes back to just like the data is what the data is. And let's not like put any judgment in there. Let's just talk about the data and why it is what it is.
Now, you brought something up that is something of personal interest to me because we have exited a business before and kind of gone through that process of backing out owner discretionary expenses that a new owner would not necessarily incur. Do you have any tips for business owners, like, even if they're not thinking about selling in the near future, but things they can do with their finances to just kind of be better prepared for a situation where to make it easier to go and like back out those things that, hey, these things that are legitimate business expenses, but a new owner wouldn't necessarily incur at this level, to help make the saleable numbers, legitimate and look better.
Yeah, I think that's where like a tool like QuickBooks can be really helpful because you can create different line items or categories in your chart of accounts. And if you wanted to separate out like, owner's car expense or, owner's bonus or something like that, so that it's like easily backed out if you ever decided to move in that direction, I think that would be really helpful because I think a lot of times what happens is people don't do that. Then they are ready to sell. And then they have to go back to the last 2 or 3 years and kind of reconcile all of those charges that otherwise wouldn't have been there. And so that takes a lot of time and a lot of effort at that moment. And so if you can do that when you're reconciling everything on a regular basis, then you'll have it all set when you go.
You mentioned the time it takes to go back and do those things. That was another question that I had for you is, many business owners, I don't think they have the time to manage all their finances and do all these great things that we're talking about here. What tasks should they personally own themselves? And which ones should they delegate? Maybe whether it's working with you or having an assistant look at some of those things. Where do they draw that line? And most importantly, do they need to really own themselves?
So I think there's a couple of things. So the first is they shouldn't be paying their credit card statement. They shouldn't be paying invoices. They shouldn't be, the ones sending the invoices to the clients, right? They shouldn't be, making the QuickBooks entries. Like all of those things somebody else can do. And their time is much more valuable than that because they are probably the face of the business. They are the strategic head of the business. They need to be working on the business in that way. What they should be doing is they should be communicating with clients when the bills haven't been paid, when they should be paid. They should be keeping an eye on the cash flow. So there's got to be checks and balances, right? And there has to be internal controls. And so we don't want the same person just having complete control and access to all of the information. And so, for example, with a couple of the clients that I work with, the owner is the only person that can actually send wires from out of the bank account. And the bookkeeper or controller can transfer money between related accounts. They can pay bills. They can pay the credit card statement. But if a wire goes out, the owner has to go in. As the companies get larger, of course, there will be other people that will be able to do that. Or in certain banks, you can have like a 2-step process where the bookkeeper inputs the wire information into the system and then the owner just goes and approves that. But I think that, making sure that there's that dual control or that separation of duties and where it really counts, where the money is leaving the business or where the money is coming into the business, the owner should be involved.
And you mentioned, looking at the cash flow and being aware of that. That's something the owner needs to own. What is the number one cash flow mistake that you see business owners make, and how can they fix it?
It's just not understanding how much cash is leaving versus how much cash is coming in. And they can fix it by doing a lot of the stuff that we've been talking about, right? Like making sure that somebody is reconciling their bank statements on a regular basis, or that is keeping their books and records up to date on a regular basis, and making sure that they understand what's going in and what's going out. And then when they look at that, they can determine, are we spending too much money in one place? Like, are there places we can cut back if we need to? Or no, actually, we're great. And let's go ahead and set up some cash reserves. Like, one of the things that I think is super important that, I talk to my clients about is making sure that you have a certain number of months set aside in cash reserves in case something were to happen. I mean, the pandemic a couple of years is a great example, right? Like some businesses all of a sudden went from, a lot of revenue to very little revenue overnight, but they still had all these employees. And so you have to have some of those cash reserves available. And so knowing when you can spend the money and what you need in your cash reserves is super important when you're looking at your cash flows.
Absolutely. That's a good point. And you mentioned, with the cash flow, understanding the expenses and, along those lines, do you see any like common blind spots that quietly drain businesses financially that a business owner should really keep in mind as they are starting to look at their cash flow more?
I think that, these recurring charges, we all do it. We sign up for something and we're like, oh, I just want access for, to get this data. And then there are these recurring charges that show up when we're not using this tool or the service anymore. So, keeping an eye on what those recurring charges are, because sometimes they're small, $20, $50, $100. Other times they can be really sizable, a few $100, $1,000. And they always come at the worst possible moment where you're like, oh, that was a surprise. I didn't know that was going to come out of my cash, this month. And so really understanding what those things are, I think is really important. And then also, kind of keeping up team perspective, employer perspective. What are all of the various, costs and filings and taxes and all of that you need to be on top of, and making sure that you're, the states that you're registered in and the states that you do business in, like there's all kinds of little like filing fees, a few hundred here, 1,000 here, that those, can kind of leak out.
So what is one thing that you recommend a business owner do today to feel more confident about their finances?
I think just look at the data, even if that's just looking at your bank statement, just scanning through it and getting an understanding of the charges that you're seeing. Like a lot of business owners, I think, like intuitively know what's going on in the business. And so they don't necessarily even need to have the whole complicated, reconciliation of things. But if they're just looking at the bank statements, that will give them a better idea of things they need to pay attention to.
Cheryl, you've shared a ton of great information with our listeners today, a lot of actionable strategies they can take to improve their finances in their business. Where can our listeners connect with you and learn more about your work and get some help from you if they need it?
So I do have a little gift for the listeners, and it's a list of the 30 finance terms that you need to know. So they can find that at www.30terms.com, the number 30terms.com, and that will help them connect up with me, and it'll give them a little bit of finance education at the same time.
We'll make sure to have that link in the show notes and video descriptions when we get this posted online. Thank you, Cheryl, so much for being on the podcast today.
Thank you. It was great.